Morning, guys. It's Tuesday, June 10th. It is 5:24 a.m. Central Time. Grain markets are mixed this morning. July corn futures down 1.5 at 4.32. July soybeans up 2 cents at 10.58 and a quarter. July Chicago wheat down 4 3/4 at 5.37 and a quarter. July Kansas City wheat down 3 at 5.34 and a half. July spring wheat down 2.5 at 6.20. The corn market fell on its face yesterday. Let's start there.
The July 25 contract fell 9 cents, settling near 4.34 per bushel, while the December 25 contract declined roughly 11 cents to settle at 4.38 per bushel. Futures came under pressure from a bearish weather outlook and uncertainty around export demand. With Brazil now harvesting its second corn crop, the window for U.S. export opportunities is narrowing further.
All right, we're going to get to weather and also Brazil in a second. Let's look at the charts. Here's the July 25 nearby corn chart. Pretty ugly stuff. Lowest trade since October, printed overnight. Perhaps that trade, or that low rather, that we posted in August, which was kind of like the early harvest low, I guess you could call it, 421 3/4. Maybe that's some sort of support area under the market. The December contract looks a little bit better, but not much better. 434 is where the contract bottomed earlier this month, and maybe that's some sort of minimal support area, but a test of those December lows down around 428 is certainly possible. Private groups estimated that the funds were net sellers of 10,000 contracts of corn on the day yesterday and hold a real-time net short of 125,000 contracts. So the funds are involved. It would appear in some sort of momentum trade here. They tend to trade momentum. When the market moves lower, they pile on. When the market moves higher, they pile on. And we're just in a situation right now where they don't see a reason to buy this thing. And therefore, I guess they sell this thing. That's kind of the way that it looks right now. So speaking of reasons, let's jump to weather.
Rain is likely to return to the U.S. Corn Belt later this week. Accumulation is slated to begin in parts of South Dakota, Minnesota, Iowa, and Wisconsin by Thursday. This morning's forecasts call for much more widespread Corn Belt rainfall during the 5 to 10 day period. Over the last 14 days, the U.S. Corn Belt has seen 107% of its normal rainfall based on data from our friends at CropProphet.
Forecast for the next 5 days is not overly wet. I mean, some of these areas, northern Iowa, Minnesota, southeast South Dakota, a little bit of Wisconsin, we're going to see some rain, but it's really during the 5 to 10 that this thing opens up and is supposed to include a whole bunch of rain for a whole bunch of areas. You guys should look at this sometimes just as a refresher. U.S. corn production density. It's these are the areas that the market cares about, and it's really these areas in the dark green here that we're watching in terms of rainfall or lack thereof. Over the last 14 days, speaking of weather that has actually happened, the Corn Belt has seen, again, as Mackenzie said, 107% of its normal rainfall. So there's not a weather problem right now. And this time of year, the market, if it's looking for a problem, it's looking for like a big picture, like national or at least big regional type problem. And I just don't know that we have one. There's enough rain in enough places in the forecast. We've had enough rain recently. I understand there are some problems out there. You've got places like Ohio and the Eastern Corn Belt where it's been way too wet, and we've still got some planting delays and some acreage switching, some messy stuff. Maybe the top end of yield's been cut off in those areas, but on a national scale, we don't have a problem. So you don't run into these like acute summer weather rallies without kind of a bigger picture problem. What you could run into, of course, down the road, let's assume that the forecast and the weather stays normalish through the summer. What you could run into down the road is hey, all that rain out east did result in big yield problems, drag the yield way down. Or maybe there was some other summer weather event, not lack of rainfall, some either heat, lack thereof, you never know. You can see late season rallies in the corn market. I know everybody's talking about the seasonals now. It's very public information in the age of social media, but the seasonals don't always have to work. And you can see contra-seasonal rallies. Go back to a year like 2010. In 2010, that was a big contra-seasonal year in the corn market. USDA cut the corn yield from August to October by like 9 bushels an acre because we ran into some just, hey, it wasn't as good as what we thought. That sort of stuff is possible, but those sort of items, whether it's too wet or delays or whatever it is, that stuff doesn't show up till later in the year. Right now, the market's just concerned about, hey, rain or no rain. And it just so happens that we've got rain, and therefore we've got lower prices.
If you guys have not checked out our premium content, you sure need to do so. Joe, can you tell our viewers about some of our recent premium videos?
I did a corn marketing update yesterday. Joe, why would you do a corn marketing update? This market sucks. Yeah, it does suck. But sometimes you need to just look in the right places for opportunities. Right now, the market is down. And when the market's down, oftentimes people, or let's say farmers, will scramble for marketing ideas or strategies. Those ideas or strategies that are often presented to you in down markets will include things like accumulators or premium pricing contracts or option strategies. And a lot of times, initiating those sort of strategies in down markets ends up being a bad decision. So we had some stuff out yesterday. I ran through everything I've advised in corn marketing, and one new recommendation in particular: you should perhaps seek a simple approach to your grain marketing. I think that this industry that I'm involved in, have been involved in for a long time, overcomplicates this thing to a very significant degree. I'm not telling you it's easy, but I'm telling you that it can be simplified drastically. Pete Meyer's doing Sunday weather updates for us. He does them every Sunday at 6 p.m. Central Time. They go out, and this is important stuff this time of year. Weather is bar none the biggest driver of corn and soybean prices during this, call it, 3-month stretch here, but it's really like now through mid-July that it's extremely important. So you're going to want to be on the premium list and make sure you get those emails and text messages with those Sunday weather updates. Go to standardgrain.com. You can sign up this morning. I'll forward you a copy of this morning's email, which includes that corn marketing update. $50 a month, cancel it anytime, no other fee, no other obligation. Nobody will try to sell you anything else. Give that deal a shot this morning, guys.
U.S. corn crop conditions improved for the second consecutive week last week. The crop was rated 71% good to excellent nationally as of Sunday, compared to 69% the prior week and 70% on average. Across the Corn Belt, states with crop ratings above the 5-year average of 70% or higher include Iowa, Kentucky, Minnesota, Missouri, and Wisconsin. Meanwhile, Illinois, Indiana, Michigan, Nebraska, and Ohio reported ratings below the 5-year average. The U.S. soybean crop was rated 68% good to excellent nationally, compared to 67% the previous week and 67% on average. Corn Belt states with a good to excellent rating above the 5-year average of 67% include Indiana, Iowa, Kentucky, Minnesota, Missouri, and Wisconsin. In contrast, Illinois, Michigan, Nebraska, and Ohio reported ratings below the average.
Okay, so corn and soybean ratings are certainly good enough to say, hey, maybe a trend crop is on its way. It's awfully early. I talked about weather. It's June 10th. The weather really starts to matter for corn when you get into that early part of July or the late part of June. We're not there yet, but there's not a problem right now. Looking at planting progress, you've still got some areas with delays. Ohio's caught up with corn planting, 89% planted as of Sunday. They would be 94 on average. Kentucky is behind. Tennessee's a little bit behind, but we're getting close to wrapping up. Soybean planting is similar. Ohio's got 84% of the crop planted. They should be at 86. Kentucky's behind. Tennessee's behind. Some of these areas have been really wet, and those are areas where you could absolutely see acreage switching and reduced yield potential. We talked with our friend Lewis Stearns, who's an agronomist in Ohio, last week about those very items. So maybe a few kind of semi-regional things to be concerned about, but you look at the ratings big picture, and there's not a problem here. Let's go to wheat.
U.S. winter wheat ratings increased last week. As of Sunday, the crop was rated 54% good to excellent nationally versus 52% last week and 43% on average. The rating was the best for the week since 2019 and also surpassed analysts' expectations of 52%. The U.S. winter wheat crop was 4% harvested nationally as of Sunday, up slightly from 3% the previous week. U.S. spring wheat conditions improved for the second straight week, with the good to excellent rating rising to 53% nationwide compared to 50% the prior week. The rating exceeded analyst expectations of 51%, but remained well below the 5-year average of 60%. Over the last 2 weeks, the good to excellent rating has advanced 8 percentage points.
So the wheat ratings improved across the winter wheat and spring wheat, and therefore the market is kind of down and out. You had some kind of nasty downside reversals in the wheat market yesterday, but we've still been kind of trending higher, generally speaking, for a shorter time frame. You've got some winter wheat harvest. I guess I could call them delays. Like Oklahoma's only 5% harvested. They'd be 23 on average. There have been some excessively wet conditions in parts of the Southern Plains, and that could result in some additional delays, maybe some disease pressure. The market doesn't appear overly concerned about any of that, however.
The Brazilian second corn harvest is progressing at its slowest pace in 4 years. According to well-followed private group Ag Rural, only 1.9% of the crop had been harvested as of last Thursday, the lowest level for this point in the season since 2021. Progress from the previous week was minimal, advancing only 0.6% and remaining well below the 10% reported during the same week last year. The harvest delay was anticipated due to late planting, and recent progress has been hindered by excessive rainfall.
Here's corn production density for Brazil for the second corn crop, and it's fairly concentrated in that kind of central-ish part of the country. Rainfall over the last 14 days in a lot of those areas has been like 130, 140% of normal. So it's been a little wet, but the crop is a good crop, and the second crop is their big export crop. So the Brazilian pricing of Brazilian corn on the export market is beginning to encroach on U.S. pricing, and we will be rendered, in all likelihood, non-competitive versus Brazil by, say, the mid part of July. The U.S. is still the world's biggest corn exporter. USDA says that Brazil will export 43 million metric tons of corn this year versus something in the, 60s, mid 60s for the U.S. So we're still bigger than the U.S., but from a seasonal standpoint, this is kind of going to be Brazil's time to shine from, say, mid-July through U.S. harvest, that time frame.
Trade negotiations between the U.S. and China are set to continue today. The extension of the talks into a second day signals progress and mutual willingness to resolve tensions. Talks have centered on export controls and rare earth mineral shipments. The U.S. is considering lifting restrictions on certain tech exports in exchange for China easing limits on rare earth exports. The Trump administration is prepared to remove export curbs on chip design software, jet engine parts, chemicals, and nuclear materials. High-end AI chips, such as those made by NVIDIA, would remain subject to export curbs. Officials from both sides described Monday's discussions as constructive.
You look at the soybean market, and it's acted curiously well. You're kind of floating above some recent highs here. It's acted much better than the corn market by comparison. I can't help but wonder if maybe somebody trading beans is halfway optimistic about these talks, because the soybean market can be a good proxy of what's going on in the U.S.-China relationship or lack thereof category. So we'll see what happens, but beans act curiously well relative to all else.
U.S. corn shipments exceeded pre-report expectations last week. USDA reported that 65 million bushels of corn were inspected for export during the week ending June 5th. The print was up 1% compared to the previous week and up 24% versus the same week last year. Soybean shipments also surpassed expectations at 20 million bushels. The print was up 81% compared to the prior week and up a whopping 134% versus the same week last year. Wheat shipments were near the lower end of expectations at 11 million bushels. The print was down 47% from the previous week and down 18% versus the same week last year.
Corn shipments were fantastic, and we've got a USDA report out on Thursday. USDA should probably come up with the export forecast or export projection rather for old crop corn. I think you've got certainly enough evidence at this point to make that revision. Is there a revision that will be made simultaneously that counteracts that increase in exports? Will be reduced feed? Will they mess around with last year's crop? I don't know. As we've discussed before, it just doesn't feel like the market is jiving with the idea of like a sub 1.4 billion old crop corn carryout, or maybe they just don't care and it's all about new crop at this point, and they're looking past the next 2 or 3 months toward a seemingly bearish new crop situation, if the weather cooperates, of course. What did cattle do yesterday?
Cattle futures were higher. Live cattle were 17 cents higher to 70 cents higher. Feeders saw gains ranging from $1.17 up to $1.60. Box beef was also higher. Choice was up $2.17 at $367.25, and select was up $2.20 at $358.93.
Outside markets are dead as a doornail this morning. The Dow's down about 30 points. The S&P's up 5. Treasuries are flat. U.S. dollar's about flat. Crude oil's up 25 cents. Gold is also about flat. Have a great day, guys. We'll be back on Wednesday.